Elon!
So back in 2007, I applied for a MasterCard for my dog. And guess what? Well, let's just say he was online buying doggy porn that afternoon. I'm only kidding about the porn. The Consumer Financial Protection Bureau is being shut down by Elon Musk.
Thank you.
Yeah, focus on those two words, consumer protection. Now, why would a billionaire want to shut down consumer protection?
Tesla is investigating this fiery explosion. It appears to show a Model S bursting into flames in a parking lot in that city. No injuries reported. Tesla did not confirm any of those details, but it did send a team to the site.
The CFPB was set up in 2010 by the Dodd-Frank reforms after the financial crisis. You remember that, where billionaire banks and lending institutions sold fraudulent mortgage bonds that nearly bankrupted the world?
It all began when banks and other lenders issued mortgages to people who could not afford them, often with low initial rates that soon increased. On top of that terrible move, these risky mortgages were bundled into securities and sold to investors as safe investments. In the aftermath of homeowners defaulting, the value of these securities plummeted, wiping out $10 trillion in global market. Banks like Lehman Brothers collapsed, leading to a global recession with 8.7 million jobs lost in the US alone.
So the idea was to have an agency that went after organizations that harm consumers, specifically in the financial sector, helping people who were scammed or ripped off sue or get compensated.
If they give you 25 cents for depositing $100 for the year, because you're getting 0.25%, and they can turn around and sell that money for $3, that's a pretty good return. So just go look. Go into a bank or a credit union and look and say, what are they paying on their money markets, their certificates of deposit, their savings accounts? And then on the other side of the wall, go, well, what are they charging? What is it for a car loan? What is it for a mortgage? What is it for a signature loan? What is it for a credit card? And what you're going to see is they're giving you a measly amount of money and they're marking it up extraordinarily to give to other people.
And of course, banks always accuse the CFPB of being unfair, and they fought the agency's rules in court, even unsuccessfully attempting to declare them unconstitutional.
Elon!
But if this creep is successful in firing 1,700 CFPB employees, consumers will definitely feel the pain. Even after 2008, banks still send credit cards to anyone with a pulse, like my dog. Consumers now face tens of billions of dollars in credit card and overdraft fees, all designed to trick you. Like a bank knows when you're overdrawn, but they let you keep writing checks because they get $35 each time you bounce one.
Meet Jordan. Jordan has $100 in her account and purchases groceries with her debit card for $50. When the payment clears, the bank charged her an overdraft fee. Why? What Jordan doesn't see are complicated payment processing practices on the back end. Jordan's bank is charging a fee, sometimes multiple overlapping fees, even though it appears to her like she has the money in her account at the time she makes the purchase. If someone's account balance shows they have enough money for a purchase, payments should go through without a fee. Payment processing policies and overlapping charges on different timelines should not change that. The Consumer Financial Protection Bureau has launched an effort to save American families billions of dollars in junk fees just like this. Learn more at consumerfinance.gov/junk fees.
And regular people would also be denied relief through the removal of a $49 billion in medical bills from their credit reports. So really, there's two stories here. The Republican attack on the ACA or Obamacare has millions of Americans falling into debt because their coverage was inadequate, and the debt destroys their credit rating.
Do you agree with the Affordable Care Act or Obamacare?
The Affordable.
And why do you prefer the Affordable Care Act over Obamacare?
I just don't agree with the whole Obamacare policy thing that's going on. I just don't agree with it.
And do you believe that an informed citizenry is essential to a democracy?
Yes.
Even advocacy groups like the Alt National Park Service recognizes the dangers of removing protections for American consumers. The CFP was dismantled over the weekend, with all activity suspended, its funding reduced to zero, and its headquarters temporarily closed, removing a crucial layer of oversight for consumer-facing financial companies. Staff members were ordered to cease all supervision and examination activities. We want to warn of a conflict of interest involving Elon Musk. Musk gained access to the agency's computer systems, raising concerns about how his pending business ventures and their competitors may be regulated. So this isn't putting the fox in charge of the henhouse. This is burning down the henhouse on a barbecue pit during a Kid Rock concert while JD Vance to your sofa.
I could keep a secret, bro. My lips stay shut.
And the National Park Service knows they could be next, with Tiny Fingers already investigating allowing companies to drill in national parks, like the Grand fucking canyon. I shit you not. The CFPB is a mini FTC that focuses on financial. Before the CFPB, this responsibility was shared by a few agencies, and man, that pissed off rich people like Musk and other Republicans.
So Section 1071 rule requires lenders that make a certain number of small business loans to collect and report to the CFPB. And it all applies, obviously, to the loan. So it's a gathering of information, right? Seems excessive, which is why I'm bringing it up.
There's a great quote in the movie The Big Short, the movie about the 2008 financial crash. It's by Mark Twain, who said, "It ain't what you don't know that hurts you, it's what you know for sure that just ain't so." In the 2000s, banks were lending to basically anyone, with upfront fees and down payments going in their pockets. They were called ninja loans, no jobs, no incomes, with the idea that should you stop paying your mortgage, they would just foreclose on you and sell it to somebody else and get more upfront fees and loans. And they especially liked adjustable rate loans that went up after a short period, leaving the homeowner really screwed. Then the banks took all these bad loans and packaged them into mortgage bonds and sold them as safe, sound investments. But they were ticking time bombs. And then the banks invented a thing called a synthetic CDO. For example, a mortgage-backed security is a CDO. Mortgages are the collateral. Investors expect to make money on their investment from the repayment of mortgage loans. That would have been bad enough. People buying bonds as investments when the underlying mortgages were shit. But a thing called synthetic CDOs allowed you to bet on a horse in a race that you couldn't even see, and they turned a stick of dynamite into a nuclear bomb. And without the CFPB, who's going to watch Musk and his friends?
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
Well, what can I do to get back
I'm sorry, sir, but this line is for bank members only.
I just opened an account.
Do you have any money invested with this bank?
No, you just lost it all.
Then please stand aside for people who actually have money with us. Next, please.
Hey!
Hello, Mrs. Farnickel. How are you today? Making a deposit, are we? Great, we can just put that into your...
So I decided to try AI, and I asked ChatGPT, what does the closure of the CFPB mean to consumers? And I got this. The closure of the Consumer Financial Protection Bureau could have significant implications for consumers, particularly in terms of financial protections and advocacy. And here are the areas. Loss of consumer protections, such as oversight of mortgages, credit cards, and student loans, meaning fewer safeguards against predatory practices by banks, lenders, and other financial institutions. Weaker enforcement of financial laws, allowing harmful practices like misleading loan terms or abusive debt collection tactics to go unchecked. In short, the closure of the CFPB means less protection for the consumers in the financial sector. Hey, but if times get real hard under Trump and Musk, your dog can always get a loan at 15% and bail you out.
I'm as mad as hell. Damn right.
Whether the women like it or not.
That's a good one.
Suck my fat one.
That's a good one.
And this guy's personal life is a total disaster.
Trust me.
Shut the f*** up, Darren.
Who's with me?
Oh yeah, the lie.
Indictable.
Out of sheer morbid curiosity, I'm allowing this freak show to continue.
I don't want to talk about this stuff.
Am I wrong?
Yes.
Tick-tock.
You're in a lot of trouble, Donnie.
I think he's crazy.
I'm Chip Franklin.